Oh, I need to open up the Prezzo. That.
And I'm going to the AI version.
Hey, so it's just gone to this. Is that right?
Yeah.
Cool. So that's the live stream. Is that what happened? Hang on.
So you're just done for the day. You're done. No, it's fine.
Okay. Okay. So that live stream thing has just gone to that.
Yeah, but there will be a webinar. Like once you start, there will be a webinar instead of this thing.
Oh. Okay. Do you want me to minimize that now?
Yeah, then just keep it.
Yeah.
We are done.
Cool. Thank you. I'll ping you when this one's done as well.
Yeah.
Hi, everyone. We'll just give it a couple of minutes so that everyone can join. We're still going up, so I'll keep waiting just for 1 or 2 more minutes. For those of you who have just joined, if you look at the bottom of your screen, you should see a little box with a question mark that says Q&A. You can open that up and type in your questions, type them in as we go. We won't do like a separate Q&A session. If you just write in your questions as we go, and I'll answer them in the relevant section. I find that normally works a bit better. And we'll sort of stop. We'll pause occasionally to go through the questions and make sure we're answering everything that needs to be done. If you can't see the Q&A box at the bottom of your screen, you should see a little button that says More. It's got a circle with 3 dots in it. Click on that, then you should see Q&A there. But I think most of you will have it just showing at the bottom of your screen. So click Q&A, it'll open the box and you can ask whatever questions you would like as we go. Great, I can see some of you have already found it. We'll just give it 1 more minute because I can see that the participant numbers are still going up. Cool. Okay, so just one more time for those of you that have just joined. At the bottom of your screen or at the top of the screen, depending on what device you're on, you should see a little box that has a question mark in it that says Q&A. Click on that, it'll open up the Q&A box, and you can ask questions as we go. I'll try and answer them in the relevant section, and then every now and then we'll just have a pause and we'll go through the questions that are stacking up. If you can't see the Q&A box there, click on the little circle with the 3 dots that says more, and you should see the Q&A option come up there. Okay, let's get started. So good morning. Welcome back to all those who have answered or have joined one of these previously. Obviously, we are now right up to the tax filing deadline for most companies being next month. And so, what we'll be doing today, revisiting a lot of the basics that we've sort of covered before, just to remind people around the deadlines. Now, I think, there's a lot of people that are joining for the first time as well. So we'll sort of be covering that off for those people also. What we will be doing that is a little bit different today is we'll go through sort of a decision tree or a filter as to the qualifying activities. I've been getting a lot of questions from people around, all right, how do I know if I'm doing a qualifying activity for a free zone exemption? Don't worry if that doesn't sound familiar or doesn't make sense. We'll go through that later on. And then, hopefully the aim of this webinar is by the end of the webinar, you'll be 100% clear on what is required of you, to be prepared to file that first tax return. Okay, I shall share my screen. Give me one moment, please. Oops. Sorry, that's still not working. Give me 1 second. Why is that not showing the correct? Sorry, just give me a second. I'm just gonna, there we go. There we go. Now you should all see the slides, the nicely airbrushed picture of me. All right, so I've just been running through what we'll cover today. And sorry, we've just had there's another 20 or 30 people that have joined. Sorry to repeat this for everyone. If you go to look at the bottom of your screen, you should see a little box that says Q&A. Click on that, it'll bring up the Q&A form, and you can just type in questions as we go, and we'll answer them as we go through the presentation. Okay, so just going through what we'll cover today. Look, we'll go over a lot of the basics, especially the deadlines, given that, September 30 is just around the corner. We'll cover off a lot of what is required, and also we'll do a bit of some assessment. We'll go through some assessment tools, especially around the free zone exemption. The first question. Okay, so the first question that I get all the time is, who does tax actually apply for, right? Or who actually falls under the UAE corporate tax regime? It is a very, very simple answer, right? So every single company falls under the UAE corporate tax regime. Now, that doesn't mean that you will end up paying tax necessarily, okay? But every single company needs to go through the process. So we'll go through what that means, but there are compliance steps that every single company needs to do, okay? So no company in the UAE can just sit back and do nothing for corporate tax. Okay. Every company has some absolute minimum requirements, which are, sorry, I'm jumping around a bit. So every company in the UAE has to register for corporate tax. You have to keep proper accounting records, and you have to file a tax return. Now, I'll go through what each of those things means, right? But the main point here is that it doesn't matter if your company is inactive. It doesn't matter if you don't have a bank account open, or if you haven't done anything with the company. It doesn't matter if your revenue is under certain thresholds, right? Every company has to do these three things. Okay. Significant fines if you don't, but we'll go through those in more detail. So the main point here is that you need to be aware that all the steps that we're going through today apply to every single company, all right? The only difference is if someone is on a freelancer license. If we've got anyone on the call who has a freelancer license, let me know. I'll spend a minute on freelancers later on, all right? But I'm going to go on the assumption that everyone who's joined us has a company set up or is looking at that. All right, the first thing to be aware of, now that we've established that every company has to do these things, is when you actually have to register. Now, the most common question around this registration right now is around the late registration fine. So for those of you who have not yet done anything for corporate tax, you do need to be aware that you have 90 days from when your company is formed to get your registration in, okay? If 90 days has gone by and you haven't done your corporate tax registration, you will be sitting on a 10,000 dirham fine. The only way you can waive this fine is by filing your tax return 2 months ahead of the deadline. Okay, I'll go through all the deadlines and what that means, right? But the main point here is, as soon as you have set up your company, you should be getting your corporate tax registration done. All right, there are significant penalties for not doing this. All right, so everyone needs to register. We've established this, okay? The next question that there seems to be a lot of confusion around is, when is someone taxable? And what that means is, what is their first tax period, or when does this all apply for a company? Now, we're going to go through some rules here, okay, which seem a little bit illogical, okay, because you sort of don't make sense of why certain dates apply or whatever, right? All you need to focus on is that this is how the law is written, and so these are the dates that you need to abide by. Okay, so companies basically will fall into one of a few different groups. All right, the first group is the easiest one. Okay, so if your company was already open by the end of May 2023, okay, so if you've had your company for a few years, right, you're in the first group. Or if you opened your company in the start of or your company was open by the start of 2023, right, you're in this first group. It's very straightforward, right? Your first taxable financial year is January to December 2024, okay? So you need to be filing a tax return by the end of next month, okay? Very straightforward, right? For those of you that have had a company for a while, or you opened it in early 2023, easy. 2024 was your first tax year. You've got until the end of next month to file. All right. If you opened your company from July 2023 up until June 2024, right, you still have the same deadline. All right. All you'll notice here is that I've skipped over the month of June 2023. So basically, a better way of saying this probably is, if your company was open up to or including June 2024, right, you need to file a tax return by next month. There is an exception. There is one exception, which is if your company was opened in the month of June 2023, which I'll go through in a second. Okay. So basically, as long as if your company was opened, in the second half of last year or earlier, right, you've got to file a tax return by next month. If your company was opened in the second half of last year or later, right, then you don't have to file by next month. You've got a longer deadline. Okay. That month that I skipped over, June 2023, okay? Unfortunately, we refer to them as the unlucky ones. If you think you may have opened your company in June 2023, the way that the law was written and has been enforced is that you had to file a tax return in December 2024, okay? And you also have to file a tax return by next month. So you've got to have 2 tax returns filed by next month. Okay. Very unfortunate if you think that you might have a June 2023 company. Remember, it's just June 2023, right? In the year 2023. Don't worry if you opened your company in June, of another month, the different rules apply. It's just that June company. June 2023 companies. Okay, so quick summary, right? If your company was open by the end of June 2024, right? So if you opened your company in the first half of last year or earlier, you have to file a tax return by next month, right? If it happened to have been opened in June 2023, not only do you have to file next month, but you should have also filed one in December. If you opened your company in the second half of last year, right? So second half of last year or later, right? That's great. You don't have to file anything by next month. You should have obviously registered already, but you don't have to actually file the return. In terms of having a couple of questions here already around the registration fine, right? So if you received a late registration fine, or if you haven't yet registered, okay? If you are in group 1, right? So you opened your company in 2021 or 2020 or, start of 2023. If you did that and you missed, and you received a late registration fine, you had to have filed your tax return by July 2025 to get that 10,000 dirhams waived. If you haven't registered and you haven't filed and you're in this first group, right, you cannot get the return waived. Oh, sorry, you cannot get the fine waived anymore. If you opened your company in the second half of last year or later, and you receive the fine, you can still get the fine waived as long as you file by July 2026. Okay. A couple of specific questions here, Pablo. So you opened your company in February 2024. Okay. So if you opened your company in February 2024, all right, you are in the bottom half of this screen. Okay. So your first financial year actually runs from February 2024 up until December 2024. So basically what this is, your first tax year, if you've recently opened your company, is always going to be a little bit strange. It'll be irregular. You're right, Pablo. And then beyond, all your financial years beyond that will go January to December. Okay. I'm just running through a few more questions. Okay, I think I've answered, the company opened in 2021. If you haven't registered or filed yet, then unfortunately you'll have the 10,000 dirham fine. You won't be able to get it waived. You have to file a tax return by next month. Otherwise, you'll accrue further fines. Cool. A few more examples coming through. Happy to run through them quickly. I'll just do 2 more. So opened your company in March 2025. Okay. So you fall into the top half of this page, right? So your first financial year runs March 2025 up until December 2025. So you're currently in your first financial year. You need to file by September 2026. And that if you have received a late registration fine, you need to file 2 months early. So by July 2026 to get the fine waived. November 2024. November 2024 is same top half of the screen. So your first financial year runs from November 2024 up until December 2025. So you have a slightly longer first financial year. Same rules apply. You've got to file by September 2026 or July 26 if you need to waive the fine. Okay. A couple of exceptions to this. All right. So one exception, I'm just going to jump on the slide for a second just to hold it. Okay, so a couple of exceptions to all of those deadlines. The first is that if your company is registered in Dubai World Trade Center, so if you are a DWTC company, then you will have very different financial years. Okay, so DWTC does not follow the standard January to December financial year. Okay. So if you are registered in DWTC, you need to check your memorandum of association, okay, for what your financial year is. You should also, and this can apply to anyone, if you're already registered for corporate tax, go and have a look, go and sign into your FTA portal or request your tax certificate from your accountant. Hopefully that's us. And we, and you can actually see on that certificate when your first filing is due. All right. Now, so DWTC is one exception, okay? You've got a different financial year. The other one, and we'll talk about, let's do the minute on freelancers now. Okay, so if you are a freelancer, listen up. If you are not a freelancer, so, every other company, right? Please block your ears for 30 seconds. I don't want you getting confused by the freelancer rules because, they specifically apply to freelancers or sole establishments. Okay, so if you have a freelancer license, right, what that means is that there is no separate legal entity as a company. Okay, so what that means, right, is freelancers only need to register for corporate tax if the revenue, annual revenue, right, so revenue in 1 year crosses 1 million dirhams. Okay, if you cross over that 1 million dirhams as a freelancer, you then become a taxable company, the same as you basically get treated as the same as any other company, and all of the other rules apply. Okay. That is basically the only specific rule that you need to be aware of. Okay. You do have a slightly different deadline, so you have basically until the end of the year. And then you have a few months after the end of the year to calculate what your revenue was for that year, and then you need to go and get it registered. Okay. So that's just for freelancers. Okay. There's a few questions. There's a few people writing in here. Oh, I'm a freelancer with a certain free zone, but some of those free zones are mentioning. Sorry, some of these people are mentioning free zones which I didn't think issued freelancer licenses. So I don't think you just need to be absolutely certain. Okay. Great. Okay. Most of the questions are coming through. Some more questions around this filing period. Okay, Jack. So this is a good question because this one is incorrect. So Jack, you opened your company in July 2024, right? So you're in the top half of this screen also. So your first financial year is a really long one, right? So your first taxable year is July 2024 up until December 2025. Okay. All right. Let's jump ahead. So we've talked about the compliance steps. We've talked about the deadlines for filing. Okay. Just a reminder, because I'm still getting questions here around people saying we have 0 invoices, we don't have a bank account. None of that matters, okay? You have to go through these steps, all right? Think of it this way, right? So the Federal Tax Authority assumes that every single company will be paying tax, okay? And you need to go and prove to them if that is not the case, okay? So if you just sit back and don't file a tax return, the Federal Tax Authority assumes that you owe them tax and you haven't filed it yet, okay? So you need to go and file a return that states that you have zero revenue, or that you are under a threshold, or, you know, or that you have no activity, all right? So these are the absolute minimum requirements, the same as everywhere else in the world, right? So every other country that has corporate tax, every company needs to file a tax return, even if it's inactive. So we are now exactly the same. Okay, you'll notice that I've mentioned this thing, proper accounting, a couple of times. So what I actually mean by that, so the corporate tax law does have a set of accounting standards, official accounting standards that are in place for corporate tax. Okay, so those are called international financial reporting standards, that is, accounting standards that are used globally. All right, so what that means is the accounting that you need to do to support your tax return needs to be done under IFRS rules. All right. Depending on the size of the company, right? So depending on the amount of revenue, you may need to, or you may be able to apply slightly different versions of IFRS, okay? But it doesn't matter which standard applies to you. You still have to actually do a set of financial statements. So a profit and loss statement and a balance sheet, okay? You can't just do some, you can't just use your bank account or write it in Excel, okay? Again, we are now the same as the rest of the world, where, every other company around the world has to do a set of financials, has to do a set of accounts and file a tax return. The UAE is exactly the same now, okay? The UAE has pretty significant, or there are quite significant penalties if you do not complete this, okay? So if the Federal Tax Authority selects you and reviews your tax filing, and if you are not able to provide a set of financial statements, then you will get a 10,000 dirham penalty, okay? Then if you're not able to correct it, or you're not able to rectify this, the penalty increases to 20,000. So you're probably beginning to see a picture here, right? Where if you sit back and do nothing about corporate tax, and you miss your registration, and then you don't do accounting, and then you miss your filing, right? You're looking at fines of at least 30,000 dirhams, and it probably goes up from there. Okay. Clement, so sorry, just quickly, there's one more question on registration. A reminder, you have to register within 90 days of your company being formed. Okay, so if you opened your company in March 2025, then you should have had your registration done by June. You'll be sitting on a 10,000 dirham fine, and you'd need to file early to get that waived. All right, the big question, all right, is will I actually pay tax? So the best way to describe this, or to explain this, is think of it as there are four tests that a company needs to fail before they pay any corporate tax. Or think of it as four separate layers that you need to fall down through before you pay any corporate tax. Okay. The first two relate to what we term the free zone exemption, or it's called a qualifying free zone person. Okay, so there are two tests which we'll go through in detail. Okay. So the first test is only available for free zone companies. And sorry, I'm going to jump around a little bit. So the first test that you can look at is if you are a free zone company and you only do business with other UAE free zone companies, right? As in you only make sales to other UAE free zone companies, then you meet this criteria. You meet the criteria of that first test to be eligible for an exemption. Okay. This only applies if you are just doing sales within the UAE free zone bubble. Okay, think of all the free zones together as collectively like a bubble of free zones. And if you're just doing sales to other UAE free zone companies, great, you satisfy this test. Okay, you only have to satisfy one of the 4 tests that I'm about to go through. Okay, now let's say that you're a free zone company, but you have a number of your clients are outside the UAE, so you're selling just outside, let's say, to clients in China or customers in Spain, right? Then you fail this test, okay? Or if you're selling to the UAE mainland, you're going outside the free zone bubble, you fail this test, okay? Then, so that means we look at the next test, right? And this looks at the nature of the business that you are doing or the activity, okay? So if you are a free zone company and you are selling outside the free zone, so that means outside the UAE, so to offshore companies or internationally, or into the mainland, right? You can only meet this test if you are doing what's called a qualifying activity, okay? And we'll go through these qualifying activities in detail, right? But just to clarify, a free zone company just selling to other or just providing services or goods to other UAE free zone companies can be doing any activity, right? But the moment that you start selling outside the free zone, right, you are only exempt if you are doing a qualifying activity. And I'll go through the list of qualifying activities shortly. All right, so that's tests 1 and 2. Test 1, think of it as like a geography criteria. So if you're just operating in the free zone, you'll meet criteria 1. If not, you fail criteria 1. The second thing you look at, if you're selling outside the free zone, is are you doing a qualifying activity, which we'll go through. If yes, you are doing qualifying activity, great, you can meet the second criteria and you can go for an exemption on that basis. If you're not doing a qualifying activity, then we look at test number 3, which is small business relief. So we've just talked about the 2 tests for qualifying free zone person or the free zone exemption, right? If you fail both of those, the next thing you look at is small business relief. Small business relief is a very simple test. It says if your revenue is under 3 million dirhams, and that is your annual revenue, right? If it's under 3 million dirhams, you don't have to pay any corporate tax. All right, it's a very simple test, right? If you're under 3 million, no tax to pay. If you're over 3 million, this test doesn't apply. You fail this test, okay? It's available to every single company, not just free zones. So free zones and mainland, all right? And all you need to do is show, you obviously need to do your accounting, and your accounting needs to show that your revenue is under 3 million dirhams, and then you'll go and file a tax return and apply for small business relief. Okay. If your revenue is more than 3 million dirhams, okay, so let's say you failed test 1 on qualifying free zone persons, you failed test 2, qualifying activities, you failed test 3 because your revenue is more than 3 million. The 4th thing you look at is your profit, okay? And this is where you have the tax-free threshold. So you don't pay any tax on profits under 375,000 dirhams. All right? You only pay tax on profit over 375,000. So, and that's when the 9% tax kicks in. So just to summarize, right? If you meet any of these criteria that we've gone through, you stop at that point, right? And you file for that exemption. So what I mean by that is, let's say you fail the first 2 on the free zone exemption, and then you meet the small business relief. So let's say you fail the first 2, but your revenue is 2.5 million dirhams, okay? You stop there. You don't even have to look at your profit. The Federal Tax Authority doesn't look at your profit, okay? If your revenue is under 3 million, that's all you have to show, and you won't pay any corporate tax. So your revenue could be 2.5 million and your profit after expenses could be 2 million, right? But you still don't pay any tax because your assessment stops at the small business relief stage. It doesn't go on to look at profit. A couple of other points on small business relief, and I'm seeing a few questions here as well. The small business relief, the 3 million is only applicable to each year. Okay, so you've got 3 million available for your first tax period, and then and then it resets for the next one. One thing to note though is that it's only available for tax periods up until the end of 2026. All right, so it was available for 2024. It's available for this year, 2025. And then it will be available for obviously next year, but then it disappears. Okay. This becomes significant a bit later on when I'll go a bit more detail into these exemptions. So the good thing is small business relief, you don't require an audit. Okay. So for most corporate tax returns, right, you don't need to do an audit unless your revenue is over 50 million dirhams, that's 50, or if you are trying to get that free zone exemption. Okay. You do not need an audit to do small business relief. Just want to draw the difference between accounting and an audit. Okay, so accounting, you still need to do, properly under the correct financial standards or the correct accounting standards, but you do not need to go and send those accounts to an auditor and pay for an audit if you're doing small business relief. All right, you can just provide the accounts as long as they're prepared correctly. Obviously, unless you know how to do proper accounting, then you should be, engaging an accounting firm to do this. Okay. Let's walk through an example of a taxable business. Okay, so sorry, I'm jumping around a little bit, but I'm going to jump back to this slide to walk through an example. Okay, actually, no, sorry, we'll do that in a little bit. All right, so let's say you're a taxable business, right? So you don't meet the free zone exemption tests. Your revenue is more than 3 million dirhams. And so let's say your revenue is 4 million dirhams, right? And let's say your profit after expenses is 1 million dirhams. Okay, so if your profit is 1 million dirhams, right, what that means is that you pay 0% on the first 375,000, all right? And then you'll pay 9% on the remaining amount up to 1 million. So 9% on 625,000. Okay, so you would pay approximately 60,000 dirhams in tax. Okay, a taxable business, right? So if your revenue is more than 4 million, more than 3 million, right? The small business relief rule disappears for you. So if you're 2.999, great, small business relief, no tax to pay. If you hit 3 million, then it's as if the small business relief rule doesn't exist and all of your profit is taxable. Okay, so small business relief disappears as soon as you hit 3 million revenue. So what we are then in a situation, right, and this is the same for all companies in 2027, all right, is how do we put in tax efficient structures? And what we mean by that is, how do we deduct taxable deductions out of, from our profit so that we can, legally minimize our tax bill. The most common question I get is around owners paying themselves salaries, right? So in the UAE, because we have no personal income tax, right? If you are a one-person company or you have, 2 or 3 employees, your biggest expense that you will be able to deduct from your company is salaries. If you are the owner of the company, right, it gets a little bit complex. Okay. So the reason you want to pay yourself a salary if you live here in the UAE is because you don't pay personal tax on that when you receive it, but your business can claim a deduction from it, so you don't pay the 9% on it. Okay. Now, if you are the owner of the company, there are two things you need to have in place so that you can deduct a salary. Now, just a reminder, this only applies to companies making more than 3 million dirhams in revenue, but it will apply to every company from 2027 onwards because small business relief no longer exists. Okay, so for those of you that have got a company turning over, let's say 1 million dirhams, right, that don't qualify for the free zone exemption, you'll be filing for small business relief, this year and next year. But then in 2027, you need to make sure that you have everything in place so that you can deduct a salary from your business. Now, there are two things you need to have in place by then. One thing, and probably the most difficult part, is that you need to ensure that you have the right documentation or the right compliance in place, right? So that you are allowed to receive a salary from the company. What I mean by that is you need to have an employment contract in place with your company, okay? You can't just pay money to yourself out of your company and call it a salary, and call it a salary, right? It needs to be supported by an employment contract, okay? And to get that employment contract, you need to speak to your free zone, okay? So there are certain complexities around this. So for example, if you are listed as an investor visa on your company, some free zones do not allow the investor in the company to be an employee of the company. So you won't be able to get an employment contract, okay? It's very easily solved. You just need to convert that investor visa to something like executive director or managing director or general manager or, something other than investor so that you can actually get that employment contract issued with the free zone between you and your company. As long as you have that, if you have that employment contract in place, great. That means you can start deducting a salary from your business, which takes us to part 2 of this, which is, okay, how much can I actually deduct or how much can I actually pay myself? And this is where it gets, it's very much a gray area. I don't want to say gray area, but the Federal Tax Authority would never provide strict guidelines around this because it always is different business to business. Okay, so the general rule is that the amount that you pay yourself in salaries as the owner of the business should reflect market value for the role that you are doing in the business. Okay, so one way to think of that is, if you were to go and do this exact same job for an unrelated company, right? So you went and got a job with another company for doing the exact same thing. How much would that company pay you as a salary? Okay, and that's the general guideline. Now, in many cases, let's say you are a marketing consultancy, right? Or a management consultancy. What would a partner in a management consultancy be earning? Great, that's probably the guideline as to what you can pay yourself. May differ by industry, may differ by type of consultancy. Are you doing engineering consulting? Are you doing management consulting? Things like that. You need to ensure that you have some kind of benchmark that you can have in mind when you're looking at the amount. A lot of questions here around we don't have WPS. So for those of you not aware, WPS exists in the mainland. So if you are an employee of a mainland company, you get paid via the wage protection system, WPS, which is a government system. WPS doesn't apply to most of the free zones, right? Some do. You don't actually have to pay the salary, each month according to the contract. You can obviously accrue salary payable, right? This is very much an accounting question, right? So I would highlight this to your accountant and make sure that it's accounted for properly. But the short version is you don't actually have to make the payment each month if you are in a free zone which doesn't have WPS. You can accrue the payable amount and then pay it, ad hoc or whenever the funds come in. Questions here, if you're on a golden visa. Yep, normally a golden visa, you can say you're on a investor golden visa, right? That's not linked to your company. That's normally linked to, say, your property or something else. You can normally get an employment contract if you're on a golden visa. The only common restriction is that if you have an investor visa as the investor in your own company, most free zones don't allow you to be listed as an employee of the company which you have an investor visa of, if that makes sense. Okay. One thing I want to cover quickly before I go into a deep dive on the free zone exemption. Something that is coming up a lot is, businesses that are closing. Okay. If you are closing the business or have closed the business, you need to be especially careful around the compliance steps that you need to follow to get your tax clearance from the Federal Tax Authority. Okay. This is where we have seen by far the biggest fines, right? So people that closed a company, let's say someone closed a company in the middle of 2024, okay, and then never did anything about corporate tax, okay? If you close your company, you still have to have registered for corporate tax. You still need to have filed corporate tax returns for any previous periods. You need to submit a deregistration for corporate tax within a certain time frame. And you also need to file your final tax return, and you have to pay any tax that is owing from all of those returns. Okay. Someone that, I'm using the example of someone that closed the company in the middle of 2024, right? If they didn't do any of those steps, they would be sitting on fines of around 35 to 40,000 dirhams right now. Okay. It's really, really big, really, really important that if you're closing a business, you get the clearance from the tax authority. I sort of mentioned before that the UAE is now like the rest of the world, okay? In the rest of the world, right, even across the border in Oman, for example, where I've unfortunately had to do this process a few times, is if you close a company, okay, the easy part is just, shutting down the company with the jurisdiction, with the free zone. The hardest part by far is always getting that tax clearance, right? So ensuring that all of your tax affairs are closed with the Federal Tax Authority. It's exactly the same in the UAE now, right? It's very easy to just close your company with the free zone, but the hard part is making sure that all your tax filings are up to date and closed and deregistered. So please be aware of that. If you're closing a business or you know anyone that is planning to close a business, so important that you get on top of this. Okay. Let's do a bit of a deep dive on the qualifying activities. So you remember I talked about the four tests that we went through, to determine whether you'll be paying tax, okay? And then we said, okay, well, the first test is, are you just doing business in the UAE free zones, right? If you go outside of the free zone, okay, you only satisfy this criteria if you're doing a qualifying activity. Okay. What do we mean by a qualifying activity? So, qualifying activities are, I've got the list on the screen now, but don't worry because it's just kind of confusing to try and read them all, especially in the 30 seconds that I'm about to give you. Qualifying activities, what the government has done is they have basically selected certain industries or certain types of company that they want to give exemptions to from this corporate tax. Okay. Generally speaking, these activities are not services. So if you are a service company doing IT services, management services, consultancy, anything like that, normally you won't be doing a qualifying activity. But most of the qualifying activities are based around heavy industry or sort of institutional things like insurance or banking and things like that. So what we're going to do, we're going to go through these assessment tools to see if you're doing a qualifying activity. Okay, now just a reminder that this just applies to free zone companies. So if you are a free zone company, we'll go through this tool. If you're a mainland company, the free zone exemption doesn't apply, but you still have small business relief and the 375 profit threshold. So let's run through this for free zone companies. First thing we look at, this is the physical goods decision tree. Okay, we'll go through services next. You only have to satisfy one of these to be, hitting this criteria. So, do you sell physical goods? Obviously, right? This is the physical goods thing. Yes. All right. Do you actually manufacture these, or do you process the goods yourself? All right. So you're not just buying and selling the goods, you're actually manufacturing or you're processing the goods yourself. If yes, great. You will likely meet the criteria of the free zone exemption. If not, the next thing we look at, okay, if you're just buying and selling the goods, is the good a recognized commodity? So, things like oil and gas, coal, coffee beans, gold, grains, all of those goods that are traded on commodity exchanges. Okay. If yes, great. You'll probably meet the criteria. If no, the next thing we look at is where are you actually registered? Okay, so in the UAE, not all free zones are the same. We have regular free zones and we have areas called designated free zones. Designated free zones are areas like Jafza, certain parts of Ras Al Khaimah, certain parts of Rakaz are designated. Designated zones are generally zones which are, the port areas which are fenced off, or warehouse areas fenced off. Dubai Airport Free Zone is a designated area. Some of them do have offices in them, such as Dubai Airport, DAFSA, right? Rakaz has some office areas that are designated. So if you are in a designated free zone as opposed to a normal free zone, okay, and you are selling B2B, so you're not selling to end users, you're not selling to end consumers, all right? If you meet those criteria, then you will likely meet the criteria as a free zone for the free zone exemption. So just to revisit, you're actually selling physical goods, right? Do you manufacture them yourself, or do you just buy and sell? If you manufacture or process, right, you'll meet the criteria. If you're just buying and selling, okay, so you're just trading. If it's a commodity, a recognized commodity, great, it probably meets the criteria. If you're just buying, selling goods and they're not commodities, you can still be exempt if you're registered in a designated zone and you're selling B2B. But if you're just buying and selling goods that are not a commodity, then you're not in a designated zone, then you're not going to meet the criteria. Okay, services. If you are providing services that are genuine logistics services, and what I mean by that, things like cargo handling, customs brokerage, you're actually brokering space, cargo space on ships, for example, things like that, customs brokerage, right? Then you would fall under this category. Logistics services does not include the actual buying and selling of goods, right? That is trading of goods, right? Or just brokerage of general goods, okay? Or commissions on goods. You have to actually be doing the logistics service yourself to meet this criteria. If you're not doing logistics services, are you providing financial services? And what I mean by that is you have to be licensed by a financial services authority. And I don't mean you have, I don't mean the trade license. I mean, you have to have that separate license from, for example, DIFC under the Dubai Financial Services Authority. So it's an additional license. If you're doing financial services under one of those financial services licenses, then you will likely meet the criteria under one of these service categories. Unfortunately, all other services do not qualify. So management consulting, IT services, marketing, online training, online courses, project management, none of that qualifies. Okay, so you would not get the free zone exemption. So that's when you would move on to the small business relief exemption. All right, and this is I've kind of bundled all the other criteria into one sort of decision tree here. So do you just have a holding company in a free zone? And what I mean by holding company is you hold investments for 12 months or more. If you are buying and selling, shares, or you're buying and selling investments and trading crypto, for example, that is not a holding company. You are a share trading company or investment trading company, and that does not qualify. Okay, so you need to actually be doing long-term holding of investment positions to get this criteria. Okay, so if you're not a holding company, right, do you only have related party transactions? So what I mean by that is, let's say you own 2 companies in the UAE, and one of those companies just provides management services to the other one, right? Or let's say you have a company overseas, you have a company here in the UAE, right? And the UAE company, you're just providing headquarter services, so management services, or you're doing the accounting for the company from here, right? So if you've just got related party transactions as your revenue, then it's possible you meet the exemption here. The last one is industry specific. Okay, so if you are in the aircraft or shipping industries, so for example, you are financing, I don't expect this applies to anyone on the call, but if you own any, ships or aircraft, or you are in financing or operating ships or aircraft, then, you may qualify. Okay, so just a reminder, right? Oh, sorry, just one more point on this, right? The criteria that we've just gone through, 95% of your revenue has to come from the qualifying activity. Okay. As long as 95% of the revenue comes from that qualifying activity, then you meet the criteria. If you have, say, 50% of your, half your revenue comes from a qualifying activity and half comes from a non-qualifying, then you lose the exemption completely. It's not a case of, you're tax-free on your qualifying and you're taxed on your non-qualifying. Basically, the business needs to be fully qualifying, or 95%, or you lose it completely. So, just a little bit of non-qualifying revenue can ruin the whole thing. I just want to jump back to remind you where we are sort of at with all of this. Okay, so remember, you've got the 4 layers. So the free zone exemption has got the 2 criteria that we talked about. So either you're operating in the free zone doing any services or any activities, or if you're outside the free zone, you're doing a qualifying activity. Okay. If you don't meet those criteria, then you look at small business relief. If you're above 3 million, then the next layer is the 0% on the first 375. Just quickly, the difference, or the reason that we want the free zone exemption first, and we look at that first, is because if you look at this diagram here that I've got on screen, the free zone exemption goes indefinitely. Okay. So if you qualify for the free zone exemption, you can just keep on qualifying for that year after year and you won't pay any tax. Small business relief, as we know, ends at the end of 2026. One thing about the rules that you need to be aware of is that if you file under small business relief, right, or if you don't get the free zone exemption, you can't opt back in. You can't get the free zone exemption for a further 4 years. Okay, so the temptation is there to go for small business relief because you don't have to do an audit, for example. So it's an easier thing to file for. But you don't want to do that if you can get the free zone exemption, because what would happen is you'd get small business relief for a few years, But then you'd be taxable for 2 more years before you could go back into the free zone exemption. So you'd have a gap, right, until you can go back to an exempt status. Basically, what that means is if you can get the free zone exemption, you should always go for that because it means you won't have this gap between the rules where you will be taxable. If that doesn't make sense, don't worry, or you didn't follow that, don't worry. The main thing here is that, if you can qualify for the free zone exemption, you absolutely go for that because that means you'll be tax-free indefinitely. Okay. That is all that I wanted to cover today. I just saw someone raise their hand. Just if you've got any questions, just remember, just go to that Q&A box and add your questions in there. I'm just gonna have a quick run through the questions, make sure that I haven't missed any significant ones. So Jack, I think I've answered that question around paying yourself the salary. You don't have, so your employment contract, if you are in a free zone which doesn't have WPS, right? Your employment contract will state a salary of, whatever, say 25,000 dirhams a month. Okay. You need to recognize that 25,000 dirhams a month in the accounts, but you don't necessarily need to pay that if you're not going through WPS. Another question. Okay, so just a reminder, you don't need an audit for small business relief. Okay. You need to do, obviously, proper accounts. You need to be able to show that your revenue is less than 3 million, but you don't need to do an audit. Another question here, if a company is set up in a free zone, not doing a qualifying activity, is it eligible for 0% corporate tax? Okay, so if you are a free zone company, but you don't meet the qualifying activity criterias, right? You can still get 0% corporate tax if your revenue is under 3 million, or if your profit is under 375,000 dirhams. Okay, I'm just quickly running through the questions as well. I think we've pretty much covered everything. Just one other thing, there's a couple of people who are a bit more, I guess, aware of the rules have asked around adequate substance in a free zone. So yes, to get the free zone exemption, you do need to have adequate substance. It does vary by business, so I don't really go into this in too much detail. If you are looking at filing under an exemption, the free zone exemption, you should really be, enlisting the help of or engaging a tax firm like us, obviously, TaxReady. Okay, the most common question that's come up a few times. I have a free zone company. I still don't have any activity. Do I have to do anything? Yes. If you have a free zone company and you haven't done anything yet for corporate tax, please register immediately. You might still be able to waive the fine if it hasn't been 90 days since you opened the company. Be aware of your filing deadline because you absolutely have to file. If you have a company and you do not file, you do not register and file, you will receive very, very significant fines. Okay. Quickly running back up through the questions. Apologies if I haven't got to yours and it hasn't been covered. There's a few quite technical questions here around, aircraft activities, things like that. You should probably just reach out to us separately if that's okay. On the screen right now, we've obviously got a QR code that you can scan. Gives you, we've got a deal, a discount going for all attendees. Great. I think I've answered pretty much everything. There's a few people raising their hands. You just need to click on the Q&A button. There's someone asking here about free zone companies versus mainland. So free zone companies don't have the free zone exemption, but if you're a mainland company, then if your revenue is less than 3 million dirhams, you can claim small business relief and not pay tax. If you are a mainland company, you need to be paying your salaries through WPS. So you need to actually be doing the transfers each month, which means if you're a mainland company, your employees obviously need to have contracts and be registered with the ministry and everything. Great. Okay, I think I've covered audit requirements. It's only required if you're getting the free zone exemption or if your revenue is over 50 million. That's same for mainland and free zone. If my company's already registered for tax, do I need to do anything else? Yep. Okay, I'll probably just say this one more time. Every company, it doesn't matter if you're doing no activities. You could have just filled out a form, registered a company, right? You have to register for corporate tax and you have to file a tax return, even if you've done nothing. Okay. Some pretty specific questions here. Neil, no, you don't qualify for the free zone exemption, but you might qualify for small business. Yeah, the rest of them are quite detailed. I think the rest of these questions you'll need to just reach out to us directly because we're getting into quite specific parts of the business. All right. Thank you, everyone. We've just run over a little bit. Yulia, I just saw your question. Please reach out to one of our team. We're getting into specific business questions here. So my team would be more than happy to help. We do a free consultation, just scan the QR code. I'm going to quickly end I think I'll finish the presentation now, the webinar now, and I believe you'll get taken to a screen where you can actually see everything that we offer and everything as well. So please, if you have further questions, we've already filed a few thousand tax returns, most of them under zero revenue or under zero tax payable. We're very practiced in how to do it. We're very, efficient on pricing. We specialize in small business, obviously being part of Virtue Zone. So we're very competitive on price. We do it very quickly, and we have obviously a discount at the moment for all attendees. So when I finish this webinar, I think you'll be taken to a screen that actually takes you to our TaxReady.ae website. So thank you. Hopefully see you again as clients, if not already, and we'll talk.